The oil markets see good news in Ukraine, so much so that the price of oil is crashing, literally. But curiously, perhaps curiously but not surprisingly, the price of gas at the pump is not. And Lyft, the ride-sharing company, is adding fuel surcharges. So are a lot of small businesses. Think plumbers, electricians, or landscapers, all that make house calls using gas. Oil is down nearly 30% from the high, and predictions that it could reach $200 a barrel seem a little bit like a distant memory. You might even remember Vladimir Putin talked about $300 a barrel. We're going to bring you over to the monitor to show you how this has happened. Gas prices over the past 18 months. Crude oil is in red. U.S. gas price average here in blue. We'll go back to 2020 as we recovered from the pandemic heading into the election. Gas prices and crude oil prices came up just a little bit. This right here is President Biden's inauguration in January of 2021. You can see there, oil started going up. Gas prices went up, but very slowly along the line. Gas prices went from about $2.80 when President Biden was inaugurated up to $3.30, $3.50 or so. Now we are going to switch to the next graphic. That will just show you what's happened in the past month. And it has been staggering. Remember, just a month ago, Valentine's Day here, oil was right at about $90 a barrel, 91. Gas was somewhere in the $2.70, $2.80 range. This is 2022, so we are moving along here. Gas somewhere in the $3 range. Oil starts to spike up here. The invasion happened here at the end of February, and that's when you had this huge spike in oil all the way up to $130 a barrel. Okay, gas spiked up as well, all the way up right here to somewhere right around $4.30. This graph on the y-axis seems to be off a little bit of the range, but that's the general idea. Oil has now crashed back down. As you can see, gas has barely moved. At one point, you could literally watch gas prices go up all the way to a national average of $4.30 a gallon. These are two guys watching the gas prices just ring up. Now, we go back to the chart. Oil is down to where gas should have been. So oil has come all the way back down, well below $100 a barrel. You draw that across, gas should be down below $4 a gallon. Oil prices go up, gas prices fly up with it. The question is, why have gas prices not come back down? One more graph that we can show you to give you a today versus last month analysis. Last month, oil, $95 a barrel, gas, $3.49 a gallon. We often talk about gas prices because they go into the price of everything we do and buy in America. Inflation is about to get a lot worse, as is the empty shelves crisis, because much of China is shutting down. We're going to get to that in a minute. Democratic Senator Sheldon Whitehouse says oil companies are to blame for much of this, for this big difference. He blames them, and he says he wants to give you some of your money back.
$90 billion in excess profit. What my bill would do is take half of that $90 billion, $45 billion, and give it back to you, to the American consumer, to spend however you want.
Let's be clear. There are potentially a bunch of problems with that plan, a bunch. But at the same time, when you see the chart of gas prices staying high and oil prices crashing, it is hard not to be confused, perhaps even angry. Andy Lipow traded oil, gasoline, jet fuel, just about everything else for 2 decades and now runs his own consulting firm. Andy, we appreciate you being with us. Is there an explanation for this huge arbitrage, this huge windfall profit the oil companies are getting, other than they're rigging the game?
Well, we should be careful here. When we think about the oil companies, we've got oil companies that have crude oil production, and they certainly are making money because the price of crude oil has gone up. But if we think about a number of the refiners in this country, Marathon, Phillips, Valero, PBF, who sell under a variety of brands, they're actually on the market every day buying higher priced crude oil and turning it into gasoline and diesel fuel.
Right, I get that. And I always understand the argument that the stuff that's in the tank at the gas station obviously was bought at a lower price, especially when things were going up as fast as they were, so people raised their prices. I'm unclear why gas prices go up so quickly but come down so slowly if somebody's not making an extra profit.
Well, people who are making an extra profit are actually the retail gasoline service station owners, which are not necessarily owned by the big major oil companies. So that's kind of where we have a disconnect.
So we're right to think that somebody here is getting rich off of this difference.
We see that when oil prices fall rapidly and the pump price comes off slowly, generally speaking, that extra money is going to the retail service station owner. Now, I do expect that the national average gasoline price is, in fact, going to drop. I've said that it's peaked this last weekend. I think we're going to see a 20 to 25 cent drop to at least $4.10 a gallon. Depending on where the futures are, we could actually break $4 a gallon. And on diesel, it's a much starker difference. Diesel prices soared to $5.11 a gallon at its peak. I think we're actually going to see a decline of 60 to 65 cents a gallon. And perhaps more.
That would be great because diesel goes into the cost of so much more of what we buy because of delivery trucks and farm equipment and the like. But I'm trying to understand from a pure economic standpoint why the gas station owners are allowed effectively to keep the price high. Is there not one guy on the street corner across the street who says, hey, I can lower my price by 5 cents, and they get into a war in the same way there's a war when the price goes up?
Well, I think that happens, and what I would say is look to the big box retailers to lower their price quickly because they're putting a huge amount of volume through their service station, and every time you buy that next load, it's getting cheaper and cheaper. So if you were to go to a Costco or a Kroger or any of the grocery chains, that's where you should see it first. That should drag down the independent owners posting price at their corner.
Thanks for watching. Click the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.